If you feel like you have too few setups every week and every month, then I want to tell you how professional traders actually operate. Not just some prop firm trader or some trading guru, but actual professionals, people who manage real money, millions of dollars every single day, how they treat trading and how they view the markets. So I have two different systems that I trade with. I have this one system which is called following my rules to the T, A+ setups, and this is what I'm currently trading on my main account. This is the system where I follow my rules. I wait for a specific thing to happen in a specific session to a specific time, and I execute without hesitation, and I know exactly what to expect. These setups work. It gives me between 4 to 5% a month at least consistently. Sometimes more, sometimes less. But this setup only occurs maybe 3 to 4 times a month, and it has a really high risk reward. So it's really good, but what do you do on all the other days? So you're probably experiencing something similar, and you want to know how you want to approach the other days, which in themselves may not give you the same risk reward and the large moves, but you still want to trade, right? So the other days you have to think a bit differently from the A+ setup days, because everyone can catch their A+ setup, but you have to think differently than all the other traders on the other days. So the other days, you probably don't want to catch as large moves as the A+ setup days. You want to trade more in a range. And you probably want to think a bit different from the majority of traders. So you want to, for example, trade on a different time frame. On my A+ setup days, I take entries on the 1 minute based on 15-minute analysis. But on the other days, I actually take the entry on the 15-second time frame. Who else does this? This is how I manage to capture large moves with high risk reward even on those days where other people simply aren't able to. And what I do is this. I don't have the same strict rules on those other days. I'm more dynamic because I know that the market punishes consistency. Not on A+ setup days, but on the other days. If I try to be too strict, too consistent with the same entry, the same timing, the market is going to do so much random stuff that I'm going to miss moves, I'm going to hit stop loss, because it doesn't work to only be, you have to be more dynamic on those days. So for example, I can take an entry 1 hour earlier, for example, on those days. And I don't look for the exact same level on the Fibonacci ratio. I look at what looks logical, what my intuition tells me on those days. I'm more dynamic, more free flow. And I risk less, but the risk is the same. Instead of risking 1%, I risk 0.5% on a 15-second, and I have 2 tries. Because I know that it's not going to hit every single time, but the risk is the same. So why do you need to think like this? You have to think like this because everyone does the same setup, the same strategy again and again, and they get shocked that they get stopped out. But the market punishes too much predictability. If you're too predictable, then you don't understand this game, because fundamentally there are no rules in trading. The market doesn't respect any rules. The market can always do whatever it wants, and people always get shocked that the market doesn't respect the rules. They get shocked that the market hovers around their TP for 2 hours straight, but they don't close the position because they have 2 strict rules, and then it reverses and break even or stop loss. Sometimes you have to take matters in your own hands because this game isn't fair and you can't be too strict with your rules. You obviously have to have rules, but you always have to be able to adapt to what the situation, the market conditions require from you. Because I can't tell you how many times I've had a strategy and I wasn't able to do a little tweak or to adjust a bit because everyone told me just follow your strategy 100% and either let it hit TP or break even or stop loss. Sometimes it's better to just use your mind and have some common sense and know when to close your position or take partials. And I want my viewers to look at the market in a way where you don't think too much always about just the same pattern, the same strict, not bendable rules, and you make it so easy for the market to stop you out. Obviously, you have to have rules, but you have to be more flexible, more dynamic, because you're not trading your rules. You have rules for risk management and to know what you're looking for. But at the end of the day, if it was so simple, I could just give you my strategy and you would be profitable. But obviously you won't, because you have to know what you're doing as well. So it's not enough to just have a good strategy and trade psychology. You have to be more adaptable as well. So if you're looking to trade as a professional trader, you have to look at the market more dynamic as well. You have to understand where it's logical to take an entry, and you have to use the correct risk management. Instead of risking 1%, you can risk 0.5% and have 2 tries. Because if you notice in your backtesting that a lot of the time you get stopped out, but the next time it works, then you have to give it 2 tries, for example, on a 15-second, because the 15-second is less likely to work than the 1 minute. So you have to think like that. So that's it for today. If you actually want my strategy or want to get my live market analysis every single day, click the link in the bio to join my Discord, or click the link in the bio to go to my Instagram and send me a DM if you want one